We focus on the current global economic outlook amid market volatility, high inflation, recession worries, and continued geopolitical unrest. As a result, KPMG has now projected growth of 1.9% and inflation at 4.7% for the next year. Economist Frank Blackmore speaks to us about these developments. Thank you so much once again for your time, Frank. And I think the starting point will be global economics in terms of the growth trajectory. What we have seen is projections being lowered and lowered as inflation worries continue. What do we make of the current climate?
Yes, good morning. I think that encapsulates it pretty well. What we've seen because of COVID and then more recently the invasion of the Ukraine, a lot of prices have been forced to increase globally, not only in South Africa as our experience is, but everywhere else, and that has forced monetary policy action in terms of increased interest rates. And of course, when that happens to a certain degree, your growth prospects start to decline. And we can see that most forecasts these days for the next year or two are that interest rates increase a lot this year. That also dampens this year's growth and of course remain high for a while, and therefore next year's growth is actually forecast to be lower than 2022 growth globally. That's the general picture on the growth side.
And 2020 is almost coming to an end, and when we talk about a brand new year of 2023 and still slow economic growth on the global scale, what then is the forecast for the start of that particular year next year, given that these concerns and the challenges that exist in the world economy are not going to go away overnight?
Oh, exactly right. So I think most people see that inflation would peak in the current year, 2022, if we don't get further shocks. So it's always possible to get more shocks on the price side, but we can see some stabilization in the main prices that have caused global inflation. Oil's back down into the $90 from $130 at some point earlier in the year. Cereals and wheats are also coming down. There has been some slippage, and we might get to that when we talk about South Africa specific on the exchange rate. So, meaning we need to pay for our imports using more rands than we used to early on in the year, and that's obviously can be inflationary as well. But inflation is seen to be peaking in 2022, but interest rates still have to catch up. So we know globally, the last move that we've seen by most of the monetary policy committees globally have been increases in interest rates. And that increase in interest rates means that obviously money becomes more expensive, borrowing becomes more expensive. And as you said in your introduction, that together with the fact that there's a lot of uncertainty means consumers don't spend as much as they could on consumption goods. Businesses aren't spending on investment, and that means growth next year is likely to decline from the levels we'll see in 2022.
And that becomes one of the biggest concerns on the domestic front, where the overburdened consumer is still really reeling from all these pressures and household consumption not being at levels that we are used to. But again, there's a worry of how does one plan in terms of their financial position, given that the cost of living continues to rise in the country.
Yeah, well, there's no choice that one has to start making decisions between expenditure now and expenditure later, and also expenditure of what goods, necessities versus sort of luxuries. I think it's a difficult time for all South Africans. So we know that the bulk of South Africans are under extreme pressure already, and I think this is true also for a lot of other economies. Globally, whether in developed or developing economies. But of course, here the participation rate in the labor market is so slow. It's an additional pressure on our economy. I mean, we have 33% unemployment. Those people are not contributing and earning an income for themselves and have to be looked after by the state. But if the economy is not growing, then there's not enough tax revenues coming in, there's not profits being made, etc. And so it's quite a vicious cycle throughout the economy.
And all this we expect to reflect in the medium-term budget policy statement later this month. What's the expectation there as growth forecasts have been dropping?
Yeah, I think so. If we had more fiscal room, I think the policy response should be, when you tighten monetary policy, in other words, when you have a high interest rate, people aren't spending, in other words, consumers and businesses, so you need your government normally to step in with a sort of fiscal expenditure response in terms of government projects, stimulating your social wage, these type of expenditures to keep that economy going. But we know South Africa has been under pressure prior to COVID already with high debt levels, and we just don't have that fiscal space. So, the chances for South Africa to get through this without suffering some degree of low growth, if not recessionary growth, is going to be slim.
Lastly, where should then the government strategy in terms of the fiscal position be? And I ask this solely because there's that debate around a continuation in the basic income grant. There's reasons there that are valid, like you referenced, the high unemployment rate in South Africa.
I think that's one of the most important points to debate in our country. We don't have the fiscal room to do both, and by both I mean a BIG, as well as focusing on things such as infrastructure. The thing with the basic income grant is that expenditure is usually used immediately on consumption goods, which is an obvious boost to the economy. Consumption being around 60% of GDP in South Africa. So if you give people money to spend and they spend it, it keeps the economy ticking on. But what it doesn't do is create that long-term growth that's needed to absorb the unemployed into the economy. For that, one needs investment growth. And so possibly a bit of both would be required. One can't only look at current growth and keeping the wheels of the economy ticking currently without thinking about, well, what about the future? One has to put down the infrastructure, and we know that's one of the big costly things currently is electricity and the sort of lack of supply thereof. That is holding our economy back in terms of economic growth. And if we don't spend money on that, then the economy really doesn't have a future in terms of economic growth. So it's important to keep that expenditure on infrastructure going to be able to, over the long term, absorb those people who are not participating in the economy into that economy. If that happens, obviously more people are looking after themselves in terms of income. There are more people contributing to your fiscus, and the government has more options in terms of what it's going to spend its money on. So growth over the long term is key.
As a parting shot, Frank, as we were talking about the basic income grant, there was a study that was released basically suggesting that a tax adjustment on the side of the wealth, as well as what is known as taxes that may go up in South Africa, as recommended by the likes of the Davies Tax Commission, would be needed to fund something like a basic income grant. Your views on that?
You have to get the money from somewhere. You can borrow it or you can tax the people currently. I think we have already high marginal tax rates in this economy. When you be talking about the wealth tax in our economy, we're not such a big economy. So wealth means people, earning not as much as one thinks. When one talks about wealth tax, you think, okay, those people are earning millions a year. Not necessarily so in South Africa. If you only would tax the people with earning more than, let's say, 5 million or 2 million in the economy, you'd get very little extra tax. And if you have to raise as much as some estimations of the basic income grant, you need, 120, 150 billion worth of tax revenues. That doesn't come just from small tax increases at certain levels in your economy.
Yeah.
You would have to have much more broad-based taxes. And again, taxes are good for some problems in the economy, but they are not good for all problems. And in this case, I don't think a tax rate increase is the right medicine for the economy. We should be spending more on the infrastructure and growing the economic base of the economy and allowing people to participate in that economy and not being dependent more on government.
Just briefly then, even that proposal of an increase in VAT would be flawed?
Yes, I think so. I think without a really large increase in VAT, we know, I think from a percentage point, we get something like 30 billion in terms of VAT. So, doing one's own maths there, it tells you it has to be quite a large, broad-based increase. And of course, that is, it's not a progressive tax. So even the poor would have to contribute to that type of tax, which is sort of against what people are trying to do in terms of this process that you're speaking about, the basic income grant.
Thank you so much for your insights. As always, that's Frank Blackmore, lead economist at KPMG, today talking to us about the impact of inflation as well as the global growth dynamics in the current economy.